Can an indicator really predict market tops and bottoms? I'm going to be testing out the top G indicator that's been shared by a trading channel called Pine Trades. On their video, the strategy itself looked quite promising as they shared a few examples. However, when we backtest and forward test this as though we are live trading, I want to uncover the truth as to whether this is something that we can actually use, or is it just another misleading strategy that looks good on the eye, but on live market it's absolute trash. Let's get down to it. So this indicator here, as you can see, it looks quite pretty. It's called the Big G indicator by Big Belunga, and at the bottom you've got the MACD, and all we've done with the MACD is we've taken off the MACD line, the signal line, and we've just left it like this. So according to Pine Trades, who has put this together, this indicator has a few things to bear in mind. The first is that if we are under this middle line here, we are trending down, and when you see a G sign, that would be an area to buy. And if you see a top sign at the top here, then this is where market is at the top and you're looking for potential entry here or potential entry here. However, just because you got the top or the G sign, which is the bottom area, you need to confirm your entry using the MACD, and this is where Pine Trades has shared that we are looking for a divergence, and only when the divergence plays out alongside the G or the top, then we would take that trade. So let's share an example like I do with all my videos. First, we're going to be picking a perfect example, then we are going to backtest this and then give our honest review regarding this. So let's get started. So you can see the G sign has appeared. We can't enter yet because we are looking for a divergence, and I've decided to go ahead with the 30-minute time frame, and just to illustrate this strategy I decided to go on to Nasdaq. So let's get down to it, and we are simply looking for a divergence. Those of you guys that aren't familiar with divergences, there are plenty of videos out there that will go into detail, but very simply, because I'm looking for a buy, I'm looking for the price to do something like this where it drops, and then I'm looking for the MACD to go in the opposite direction. So this is what you would call a regular divergence. Price is going one way, the indicator is going the other way. So that's what I'm actually looking for. So let's see what happens here. Okay, so you can see straight away we have got a situation where price is creating this kind of divergence. You can see right here, creating this divergence over here, there. So at this point, what do? Do you enter the trade? Well, if you notice, there's these little caret signs here, these little arrows. According to these little arrows, this is what you call the intermediate low of the market. So these are high probability risk trades, so meaning that the risk is higher than, for example, if you were looking at the G sign. So because we got this divergence at this point, can we enter this trade? Because we got the divergence playing out, let's see. And then all I'm going to do is go for a 2-to-1 reward to risk. Where do you place your stop loss? And this is where the strategy from Pine Trades wasn't clear as to where to place the stop loss. Do we place it at this low, or do we place it somewhere down here? There's no clarity as to where to place it. So if I was to place my stop loss, say about there, that's where I would get my 2-to-1 reward to risk. So if I was to risk 100 and I'm looking to make 200, so let's see what happens. Does it go in our favor or does it get stopped out? Okay, so in this instance, you can see that price did go in our favor. And let's do one more for a potential short, if there is one. Have we got a short? Okay, brilliant. We've got a potential short coming up here. We've got a market top there. So all I'm doing is I'm drawing a line that way because I want price to go higher, whereas the indicator, I want it to go lower there. So let's see what actually happens. Does it do that? Not yet, because you can see that we need the MACD to do this and then fall. Okay, I wouldn't be entering here. Let's see what happens. Okay, there you go. You can see price has gone higher, and we got a situation where now we have got a divergence, you can see. And then I'm going to go for another 2 to 1, something like this. I'm going to be placing my stop loss a little bit higher. Okay, there you go. So if you notice, my target isn't at the low of this middle line. I'm just aiming just before that middle line because I'm thinking to myself the price may well bounce from here. I've got a good risk to reward, stop loss is above, and let's see what happens. Okay, so in this instance you can see that I almost won the trade. Had my stop loss been a bit more tighter, that may have been a winning trade. But you can see from this example, you've got a buy and you got a sell. You can try this on different time frames. So if I had gone on to the 1 hour time frame, that may well have worked on the 1 hour time frame, you can see. Or you can go on to the half an hour, 45 or 30 minute, depending on how many trades that you want. The more lower the time frame, the lower the win rate will be. Okay, so now that we have got the examples out the way, let's do a back test and see if it's as good as it says it is. And the results may well be quite surprising to you compared to some of the other videos I've shared with you. And if you haven't checked them out, then you can check them out on my video category. And if you're not subscribed to my channel, a lot of you guys that are viewing this channel, you're not subscribed, make sure to subscribe, put the bell notification on, and smash the like button if you're enjoying the video so far. So I'm going to be going back to, say, give or take November the 6th, not too far back, because I want to keep the system relevant. And you can see that we are in a no trade zone. All I'm looking for is market top and market bottom. Okay, so let's see what happens. Okay, we have got an intermediate top there. These are high risk trades, so I'm not really looking to trade these. What I would like is I would like a top sign alongside a V sign. That would be a stronger signal. Let's see what happens. Okay, see, there you go. So we got a V, didn't come in use. Okay, now that we have got a top sign, we're looking for a potential divergence. Okay, so you can see that momentum is starting to shift towards the downside. You can see with the MACD. However, I need to see something like this. Okay, I need to see something like this. So if we get a blip up like this and the price goes higher with the momentum going lower, that would be my divergence. So at this moment in time, nothing yet, but I am watching. Okay, this comes up now, nothing yet. You can see we haven't had it pop up yet. No divergence, no trade. Okay, nothing as of yet. Okay, there's literally, you can see from here where we line up the top part, we didn't get any divergence. Can you see that? Yep, we didn't get any divergence, so we're not going to take that trade. On to the next one. We are on the 1 hour time frame. So we have got a G sign that's telling me market bottom, and we're just going to wait for a divergence. So is that the divergence that we were looking for? Let's take a look. I'm just going to go back and let's see what happens. Yes, that is a divergence there, right there. You can see it's popped up. There you go. So this is where I'm happy to take the trade. Can we get a 2 to 1? In this case, you can't really even get a 2 to 1 without your stop loss being tight. So what's the likelihood of me trying to get 2 to 1 with it being above? Let's test it out. Stop loss there, 2 to 1. Let's see what happens. You can see we had a reaction there that wasn't quite 2 to 1. Okay, price. In this instance, we had price almost hit our TP. Yep. Okay, so that one is a win. No problem. Wicked. We got a win there. And let's move on to the next one. We've got a market top. You can see, but market top, we've got a divergence right there. What I would like to see in this instance, you can see the divergence there. I would like to see price. If you look closely on that bar, I need that bar to shift lower. Have you got that? Yep. Yep. Got that there. Okay. So let's try to go for a 2 to 1 again. I'm going to go for a short. Aim for something around there, but I'm going to put my stop loss for a 2 to 1. There you go. And let's see what happens. As you can see, price stopped us out. Okay, we go towards the next trade. Let's go towards the next one and let's see what happens. You can see market is top there and we've got a potential top line coming up again. We're going to look for another short. Okay, have we got that short yet? Not yet. We need the momentum of the MACD to push up so that we are looking for something like this. We're looking for something like that, and we're looking for something like that. That would be a divergence. At the moment, we haven't got anything just yet. Let's see what happens. Nothing as of yet. Nope. Okay, so you can see the initial divergence that we were looking for. It's been invalidated by this new momentum on the indicator, the MACD. So we are now going to be looking for another short. Let's see what happens. If we get another market top, we look for a short. There you go. We have got, let's see, let me get that. Okay, these are your higher risk tops. We already got the top sign, so you can see from the moment we have the top sign to where we are, it's quite a journey that price has had. So let's take it. Let's take this and aim for somewhere there. Stop loss would be a bit higher, 2 to 1. I'm using the midline here, which is my target, to determine where to place the stop loss. Let's see what happens. Okay, so you can see the initial midline here. As price continued to go higher, the midline went higher. So in this instance, we got stopped out. You can see. Okay. Let's see if we can get another short. There you go. We've got another short just here because we got a divergence there. Okay. Right there. And we got price moving to the downside. So ideally, just go back by a couple of that. It would look something like this. So that would be our entry. We would enter somewhere along the line here. And then again, we've got absolute, because the midline is so close, the reward to risk is not going to be that good. So if I was to take that trade, we haven't even got a 2 to 1 in this instance, so it would be quite a risky trade. So I would avoid that, because we really need price to create the distance between the midline and the price to get that reward to risk. That's something not mentioned in the original video by Pine Trades. I just noticed it now. So you can see price continued going up. So far, looking at this and the way it's trading, my humble opinion, honest review about this, I personally would avoid trading divergences, because when you trade divergences on a trending market, you are going to get caught out multiple times. You know, there's times where you might get a situation where price is at the top there, and you can see very clearly, even though we're at the top, there was no divergences given on the MACD there. So a tune up to this strategy may be that you could use an RSI maybe. Let's have a look at any RSIs. Could the RSI give us a different signal? So you can see that if we had the RSI, when the market top happened, the divergence happened here. The signal wasn't given on the MACD momentum, but the RSI did. And you can see that the RSI was probably a bit more accurate in terms of entering the trade. However, when it comes to letting your trade run, when the RSI gets to about here, then you might be thinking to yourself, okay, we're at the bottom, so maybe we need to exit the trade. So it might cause you to exit trades early. Another one is with the RSI, you can see that price here is also giving you a divergence, you can see. So using the MACD momentum on this, I personally think it isn't as efficient as using the RSI, but can the RSI be as efficient as the MACD? So let's get rid of that. I didn't like the way the momentum on the MACD worked, couldn't get us in the entries. And let's randomize this one more time, and let's see if the RSI makes any difference for this top G indicator. Okay, and let's do one more. Let's see. Okay, we're getting to the top. You see, we're at the top. Okay, now that we have got a market top here, according to this indicator, the RSI at this moment in time is showing us a potential that price may tap this bit here and then fall. Let's find out. Did it do that? Let's see. Yes, it actually did here. It did there. You can see price actually did it there. So you got your divergence right there. Okay. You can see. And then stop loss. Again, where do you aim for the profit target? Because if it's just there to there, your reward to risk is going to be tiny. You probably get a 1-to-1 if you're lucky, but if you want to get a 2-to-1 with a decent stop loss area, you need to aim for somewhere down there. So let's see what happens if we get it or not. Okay, so initially we did go into profit, and you can see that price has taken us off. So if I was to be testing this further, it would be using the RSI, not the MACD. That's point number one. Point number two is divergences. Personally, I would avoid trading any divergence strategy, because when you're in a trending market, divergences will get you a lot of losses in a trending market. However, if you are in a ranging market, this is where you identify on the higher time frame whether we are in a range or not. Then divergences do work quite nicely. However, for this particular strategy, the one that's been shared by Pine Trades, personally, after backtesting this one, I wouldn't use it. I would avoid it and look for better strategies with better setups, which you can find in my channel. Go onto my channel, you'll see other videos on there, and hopefully you found this video helpful. And if you've not smashed the like button, smash the like button for me. It really helps out the channel. And if you're not subscribed, do subscribe to the channel, and smash that bell notification so you do not miss the next strategy video.